Assalamualaikum warahmatullahi wabarakatuh. Welcome to ACC106 exercise video, where this video will explain to you how to do or how to calculate the financial ratios that you have learned in the previous video. Okay, let's say you are given data on the left like this. You are given what amount of opening inventories, closing inventory, bank accounts receivables, and etc. until the capital amount. So these are the items that has been extracted from the financial statement, means from your statement of profit or loss and also statement of financial positions. But they this data is not presented to you in the proper form. They just give you the data, and when you want to calculate the financial ratio, so you need to understand which data belongs to which classifications. Okay, let's say we want to calculate the current ratio. So current ratio, the formula, you must remember it. The current ratio's formula is current asset, total current asset divide with total current liability. So you need to extract the data from the data given to you. What are the items that is belongs to current asset and which one is belong to current liability? So let's have a look. Okay, the closing inventory belongs to the current asset, and also the bank account, bank it also is current asset. Same goes with the account receivables. Prepaid electricity is a prepaid expenses. So you look at the table prepayment and accruals, the accrual table. So this is also a current asset. Accrued dividend also a current asset. So these are the current asset. Account payables, however, is not a current asset because account payable are the current liability. So let's say we use another color. Wait, account payable and accrued. Accrued utilities is accrued expense, also a current liability, and prepaid rental receipt is also a current liability. The credit sale, these ones are not current asset or also not current liability. Opening inventories is not belong to current asset. Yeah, opening inventories belongs in cost of sales when we calculate the cost of sales or cost of goods sold. Okay, so we have identified which item is belongs to current asset and which item belongs to current liability. So remember the formula: total current asset divide with total current liability. That is the current ratio formula. Okay, so we key in the number for current asset, which is the closing inventory 18,600, and bank is 54,150, and also we key in the number of account receivables 20,000, prepaid city 250, and the accrued dividend 1,000. You must show each individual amount in your answer. You cannot just using, let's say you want put the total amount or the total amount, because it's very dangerous. Sometimes you wrongly calculate the total and the figure is different from the answer, the actual answer, and you will not given any you will not be given any marks if the answer, the total one, is different from the actual answers. So you need to show the individual amount of the current asset and also the individual amount of the current liability. For example, this one, account payable is 50,000, and also we put in the amount of accrued utilities 6,400 and the prepaid rental receipt 4,000. So then you need to calculate all the amount, the total of current asset and also the total current liability. Okay, then you total them up, the current asset, and also you total the current liability 50,000, add with the accrued utilities and also prepaid rental received 4,000. Okay, that is the amount. The total current asset is 94,000, and the current ratios, the current liabilities is 64,000. So the actual so when you calculate the ratio, so you will get for 155. However, this you have a lot of decimal point. You only need 2 decimal point, so you can reduce that decimal point to I can't see it. Once you rounding up to 2 decimal point, so it becomes 1.56. Remember to put the semicolon representing the ratios 156 to 1. Okay, then the explanations that you need to write business as RM 1.56 of current assets to pay RM1 current liabilities, because the 1.56 represent the number of current asset, and the one here is representing the current liabilities. Okay, then let's move on to the asset test ratio. You already calculate the total of current asset is 94,000. So you will use this data, 94,000. Okay, the 94,000, and the formula test ratio, the total current assets should be deducted with the inventory, the closing inventory, and also must be deducted with the prepayment expenses. So any expenses that has been prepaid, it's very difficult for you to turn into cash, because you cannot ask the third party to return your money. Okay, so the closing inventories amount is 18,600, and the amount of prepaid expenses is only one prepaid expenses, that is prepaid electricity. And sometimes you have 2 or more the prepaid expenses, so you need to total them up, the prepaid expenses. So you only have one prepaid expenses, that is prepaid electricity, that is 250. And the total current liability you already calculated previously, Friday, then you use the amount of that amount, 60,400. You do not need to calculate it again because you already calculate here. Okay. Okay, then after you calculate the amount of total current asset, deduct with closing inventory, and also you deduct with prepaid expenses, like prepaid electricity. So you have the most liquid asset amount is 75,150. And again, you still deduct it with the total current liability is 64,000. So your answer would be when you divide the 75,150 divide with 6,400. So you have again, you have lots of decimal points. So just round it up to or just put the decimal point, 2 decimal, and do not forget to put the semicolon representing the ratios and 1 representing the current liabilities. So your answer should be 1.24 to 1. Okay, then the explanation is actually the same as, more similar, not the same as, it's very similar to the current asset, except you need to change the word of current asset to most liquid asset. And the total is 124. So you have the explanation of business has 1 ringgit and 24 of most liquid assets to pay 1 ringgit current liabilities. So you must use the word most liquid assets. Okay, next move on to calculating the gross profit margin. Here, they did not give you the amount of gross profit, but you have to remember how to get the gross profit. Do you remember how to get the gross profit amount? What amount? Okay, the formula to get the gross profit is actually the net sales deduct with cost of sales or cost of goods sold, right? That is the formula. Net sales deduct with cost of sales or cost of goods sold. So here you have 2 different data of sales. Here it says net credit sales, means that it's already deducted with returns and also discount allowed. And another one is cash sales. So you will total those sales, so 215,000 and also 25,000 of cash sales, because sales can be in terms of cash, means that it's already paid, and credit sales means that they have delayed the payment. Okay, and the cost of goods sold or cost of sale that's been given is 103,400. That is the amount of cost of goods sold or cost of sales. So you have the net sales, total them up, and deduct with cost of sales. That is the amount of gross will be the amount of gross profit. And again, just now, the formula gross profit margin is gross profit divide with net sales. So you already calculate the net sales just now is 215. The net credit sales add with the cash sales, so the same amount. Okay, so when you calculate the items, oh, I forgot, you need to multiply with 100. So the gross profit divide with net sales and multiply with 100. That is the formula for gross profit margin. So this one, you multiply with 100. So it should be in terms of percentage. That is 56.92, or you can put 57%. Okay, and you can change it to in terms of percentage. Oops. Let's put 57%. So your explanation would be business RM, the 57. So you can use that 57 figure of gross profit for every use 100 because you use that amount 57, right? So you use 100 ringgit of sales. That is the explanation for gross profit margin. Okay, move on to net profit. Okay, net profit margin is net profit divided with net sales. Okay, the formula for net profit is gross profit add with other revenues and deduct with other expenses. So the data that you already given, other expenses 88,000 and other income 45,000, but that is no net profit figure. So you need to calculate them. So the formula to get the net profit is gross profit. Okay, the amount of gross profit deduct add with other revenues and deduct with other expenses. That is how to calculate the net profit. So you have the gross profit figure, that is the amount of gross profit we already calculate here, is 136,600. So 136,600. Oops. Oh God, man, wrongly. Okay, 136,600. That is the amount of gross profit. And the amount of other revenues in the data given to you, other revenues, or it says here other income, is the same amount, is 45,000, and the other expenses is 88,000. And again, you need to divide with net sales, because the formula for net profit margin, as I said earlier, net profit divided with the net sales. The net sales we already calculate above when we calculate the gross profit margin. So the net sales is 240,000. That is the net sales, and do not forget to multiply it with 100. Okay, and so the amount would be, okay, once you calculated that, the result is 0.39, so it is equals to when you put when multiply with 100, it becomes 39%. Okay, then the explanations for net profit margin, again the same as the gross profit, very similar, just change the word gross profit to the net profit, and the amount of the result that we have calculated is 39. Okay, next is how to calculate the inventory turnover. The formula for inventory turnover is the cost of sales or cost of goods sold divided with the average inventory. So your data has been given what is the cost of sales, that is 130,400. That is the amount, and the average inventory must you must have opening inventory, that is 22,700, and the closing inventory, that is 18,600. You must add the opening inventory with the closing inventory, 22,700 add with 18,600. You must add those two first and divide with 2, because you need to calculate the average amount of inventory. So your average of inventory is 20,650, and the cost of goods sold or cost of sale is 103,400. So you divide these two, and your result would be 400 divided 20650. Okay, 5. So it's for the result, the answer for inventory turnover should be a whole amount. No need to have the decimal point. So you can reduce those until the whole, and your answer should be put times the word times. Okay. So your explanations, business again, business replaced replace the inventory 5 times in a year. So in terms of 1 year or 12 months period, business is able has replaced the inventory 5 times. Means that the business has been purchased, stored, and then sell them off. Okay, that is one cycle, one line. And then the business can purchase again, store, and sell until the 5 times. So it can be a very good management of selling of the goods or the products. Okay, the next, the last one, the ratios that you need to calculate is account receivables. AR represent the account receivables. So the account receivables collection periods or debtors collection periods ratios. The formula is account receivables amount divided with the total of credit sales or net credit sales. Okay, the account receivables has been given to us is 20,000, and the credit sales, sometimes you do not have the amount of credit sales. The company do not reveal the amount of their credit sales, so you can use the net sales. But the data has been given to you, you already have the net credit sales amount, so that is 215,000. So 20,000 divided with 215,000 and multiply with, you can use 360 or 365, doesn't really matter. But if the question asks you to use 360, you must use the amount 360. Because this is the number of days that the business operating for the year. So you should use which number of days that the business operate for the year. So I use 360. So the amount, would be okay, there must be something wrong with it. Okay, it's wrong formula. It's not divide, it should be multiply. Okay, so 20,000 divided with 215,000, that this is the credit sales, this is amount of account receivables, and multiply with 360, so you have the 33.488. So you just use the even number, the whole number is 33 days. So your explanations for this ratio, business able to collect debt from its customer. Oops. Within 33 days. Business able to collect that from its customers within 33 days. That is how you explain the accounts receivable collection periods. Okay, that's all. How to do the calculations of ratios, all the ratios that you have learned. Thank you for watching.